Recommendation for companies: prevention from other financial crimes and money laundering. Transparent relationships with client. Client identification (KYC), the Know Your Customer principle, should be governed by strict laws. This keeps those with shady motives out of the financial system. Apply this concept with the same rigor to firms with complicated structures to identify the true natural persons behind the corporation. Training for existing and new employees. Place a high importance on training to guarantee that employees can positively identify and know clients. This includes mandatory training for all new employees on the risks of money laundering and the steps that can be done to prevent it. Furthermore, employees are periodically trained on new legislation and advancements in the field of anti-money laundering. Monitoring of accounts, transactions, and client data. Special software was introduced, allowing the company to detect and investigate any potentially suspicious activity. Ensures the implementation of national and international sanctions and embargoes. As a result, the organization can ensure that we do not do business with people or entities on international watch lists or blacklists, nor do we allow transactions in their name or for their benefit. The risk-based approach of FATF. The FATF recommends that all organizations use a risk-based approach. This means that, in addition to implementing the standard safeguards, each company assesses its country-specific money laundering risks and takes all necessary additional steps. Officers in charge of anti-money laundering. Appoint an anti-money laundering compliance officer. An anti-money laundering compliance officer is the person in charge of the company's anti-money laundering policies and processes. The AML officer is in charge of the company's internal and external control mechanisms, as well as its compliance.